This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Paul Tudor Jones, originally featured in Jack Schwager's The Market Wizards, the first edition. Gosh, I'm hoping that I'm right about that. It's got to be the first one. I'm doing this on memory. Paul Tudor Jones, the guy that was featured in that great documentary called Trader when he was a younger man, so behind the scenes, such a great attitude. I know he wanted to keep it off the internet for a long time, and perhaps he's been successful, but it's one of the best documentaries on trading ever. It's just awesome. He was then featured in Anthony Robbins' book, which I believe was called Money, I think. Again, this is going on memory. And he had those great lines in the book talking about moving averages and trend following and stops. Just the other day here, last week, Paul Tudor Jones came out with this 30-second soundbite, or at least I'm only taking 30 seconds.
If there was a strategy that I would want to employ right now, if someone put a gun to my head, I'd say simple trend following strategies. They're not too popular today. They haven't worked really that well for the past decade. They didn't work when central banks were at zero rates. They'll probably do really well, I think, in the next 5 or 10 years, because we're probably going to be in one of these stop-start patterns.
I cut it off, but the important part was trend following the next 5 to 10 years. Now, let's be honest, most people don't have any idea what trend following is. I get an email a day where somebody tells me they are trading 5-minute bars as a trend following trader. Let me put this so clearly that hopefully you can understand. If you think you are trading as a trend following trader on 5-minute bars or 60-minute bars, you are not. I don't know what the F you're doing, but you're not a trend following trader in any way, shape, or form, as the definition is commonly known, for example, as Paul Tudor Jones just referred to it. Paul Tudor Jones was not referring to trend following on 5-minute fucking bars. Capiche? Yeah, there's a little attitude there for me because I got to tell you, the numbers of people that send me these damn emails on the minute bar trading, it's off the hook. Now, perhaps this is panic and just idiocy and who knows what. But the important part, not to go too much off on a tangent on 5-minute bar nonsense, the important part is Paul Jones saying that trend following is the path forward. Now, in my humble opinion, I think it's been the path forward for a long time already. And I'm not so sure because, let's be honest, Paul is on CNBC, a big public channel. But the reality is, if you look at Paul's track record, if you look at how he made his money, perhaps he would not refer to himself as a trend following trader per se, but there's a lot of trend following in Paul Tudor Jones' fortune. If there wasn't trend following, he would not be the Paul Tudor Jones that we know about. So for me, it's not necessarily a surprise to hear him say that, but it is kind of cool that he's right there on CNBC in the middle of equity markets melting down, in the middle of Bitcoin melting down, and he's saying unequivocally, if you hold a gun to my head, I'm going to say, I'm going trend following. Now, why is that? Because he's a smart guy that knows he can't predict a damn thing. He knows right now uncertainty is the rule of the day. And if uncertainty is the rule of the day, and volatility has expanded like gonzo, trend following is the strategy. Now, we got to be careful that when he says trend following has not worked for XYZ period, that doesn't necessarily mean he has not been trading part of his portfolio as a trend following trader. And I'm going to get to the it has not worked for a period of time point in a second, not to pick on Paul Tudor Jones, but to add some clarity and to add some context. because it was his soundbite. And look, if he was talking more about trend following, I'm sure he would have provided a lot more depth, obviously. But when you get the CNBC guys asking you questions, and most of their questions are at the grade school level, and Paul Tudor Jones is at the PhD level, well, he's got to bring it down to their level. But again, I'm happy because he came out and he gave everyone that was listening, if they're truly listening, he told them the secret sauce. Go trend following. Either do it yourself or hire someone. Now, he didn't say that. I'm saying that. Those are your options. Do it yourself or hire someone. I mean, how the hell else are you going to capture these moves that are coming out of nowhere and are just racing up and down? What, are you going to have the fundamentals figured out? Give me a break. It's price action. These are price action markets. You follow the price. You check your ego. I mean, I might sound cocky and I might sound confident right now, but that's just because I'm talking about the strategy of trend following. I'm not telling you that I know what's going to happen tomorrow. I'm not trying to pretend that I do. And if you're pretending that you can predict tomorrow, you're a fucking fool. I mean, seriously. After the first 4 months of this year, if you're still sitting here in May of 2022 and you think you can predict a damn thing, what's wrong with you? Did your father beat you when you were a kid? Did the other kids beat you? Something wrong with you? You got dropped on your head? How the hell do you think you can predict anything? The Nobel Prize winners can't predict it. The best, quote, economist can't predict it. The political leaders don't know their ass from a hole in the ground. The people that are impersonating whoever, whatever anonymous troll on Twitter, they don't know what the hell's going on. The only thing that knows what's going on is the price, because the price is doing what it wants to do. The price is the truth. The price of whatever market is the truth at this moment in time. Your opinion of the price is bullshit. My opinion of the price is bullshit. Anyone's opinion of the price is bullshit. The price is the truth. Now, this is not easy for people to accept because essentially I'm really talking about a game. I'm talking about treating the markets as a game where it doesn't even make a difference what is the name of the market. Because if you're trading the price, who cares what the name of the market is? Whether it's Moderna or Netflix or Amazon or Apple, why does it matter? Just cover up the name and look at the price data. Can you trade that price data without knowing that it's Netflix, without knowing that it's Moderna, without knowing that it's crude oil, without knowing that it's soybeans? This is the operative question. This is the question that is never asked in colleges, across universities, in finance programs. Because all of those programs are built on a system where the kid has to learn from the textbook that the teacher wrote. And guess what? Those teachers make an absolute F-load of money from selling textbooks. And those textbooks are all about their opinions about what will happen tomorrow. So the kid goes to school, they give him a textbook, he pays $300 for a textbook, the teacher gets fucking rich, and there's nothing in that textbook that can tell them in any way, shape, or form what markets to trade, how much to trade, when to enter, when to exit with a loss, and when to exit with a gain. It does not exist in those textbooks. But the teachers, they get filthy fucking rich, and the kid walks out of school with a finance degree, and he's still in the fucking clouds and doesn't know a damn thing. And if you're sitting out there like a troll right now and saying, well, Mike, that just means you want people to buy your book, would you give me a break? Go look at the content of the books that I've written. It's just objective. It's objective based on something. What's it objective based on? Performance data. Maybe you saw this coming. Maybe you saw me going to the tried and true objective background of trend following. Performance. If there's no performance, then it's all shit. Even Paul Tudor Jones, he says, go do trend following for the next 5 to 10 years. But he did not have the opportunity in that quick soundbite to talk about the performance, to talk about why. I mean, he talked about why in terms of global uncertainty and big trends and volatility expansion. Okay. But the proof, all of my books are based on proof, track records. Who are these trend following traders? Okay, yes, I give those stories, but what is the data? How have they performed over the decades? Not the week, not the month, not the year, the decades. Dozens and dozens of performers over the decades backing up the words, backing up my attitude. And my attitude is only just this incredulous attitude of how the hell are people not being informed of this particular strategy? Because ultimately it's a good thing. You can sit there and you can be at the mercy of the Fed taking you home every night in 2002, 2008, other time periods, 2022. The Fed takes you home at night. And as I've said on this podcast many times, they tuck you in. Maybe they give you even a little bit of a kiss on the lips. Let's hope it's a closed mouth kiss. But hey, some of you people out there are a little weird and you really, really love the Fed. So who knows? Maybe it's open mouthed. Do I sound a little crazy? I think believing in the Fed is crazy. I think believing in the Fed is tantamount to an open mouth kiss with the Fed. I mean, at some stage of the game, you've got to be a psychotic to trust these MFs in DC to take care of you. Because here you are right now in 2022, looking at a scenario where very well likely we're in the midst of another 2002, another 2008. I mean, everyone knows what's happened to assorted markets right now. I mean, some of these individual equities have melted down. We've seen massive moves. Now, we've not yet seen indices go down 50%, but the Nasdaq's in bear market territory. It's not too far away from being able to imagine it going down 50%. So another big event. Now, what about this performance data that I keep riling on about? This trend following performance data that I'm so cocky and cocksure about, that just proves my attitude, proves my words. Where's that data? Now, of course, one little caveat here, one little side note. In my books, I give all kinds of performance data across all kinds of traders. But look, time marches on. Folks retire. They get so damn wealthy, they move and buy an island, whatever. So it's always about trying to find what I would like to think of as that, how should I call it? That proof, that rock solid proof that's been going on for well over a decade that you can just look at and go, consistency. Now, often Dunn Capital has been that model for me. They've been doing it for over 45 years, I believe. But that's just nuts. Now, I do know in the last handful of years, Dunn has brought their leverage down a little. So they're not as rock and roll as early on, but they still produce fantastic risk-adjusted performance. I'm not being paid for that. It's just the reality. Go look at the performance data. You can judge for yourself, or you can stay there staring at the wall as the Fed tucks you in at night, basically taking away half your money every 5 or 6 years. But I got to tell you, there is one trader that I really, really love for pulling up his performance data today. And his track record goes back to 1999. Today, that's 2022. So it's over 20 years. And that trader would be Paul Mulvaney of Mulvaney Capital. Now let's just talk about 4 months for the moment. Those 4 months would be January, February, March, and April of 2022. 4 months. You know what's happened in the last 4 months across indices, across individual stocks, across commodity markets. You know what the jig is. If you've had a good trend following strategy, you're smiling ear to ear. If you've been tucked in by the Fed every night, you've probably been like a bedwetter or something now. You've lost your marbles. Those first 4 months of this year, January, February, March, April, Paul Mulvaney, 14.71% January, 6.49% February, 21.57% March, 26.45% for April. For the year, 87.79%. 88% first 4 months of 2022. That's just fucking amazing. That track record should be a textbook. You know, you go to your finance class and instead of your asshole teacher giving you some textbook that he wrote, which is a bunch of opinions about his supposed view of economics, instead of all that, if I'm the professor, I walk in 1-page printout, here's Paul Mulvaney's track record, 1999 to 2022. Here, let's discuss this. That's it. We spend the whole semester figuring out how to reverse engineer that track record. That is a fascinating learning lesson. Now, just before you think I'm too much of a homer and I'm giving Paul too much free press, let's go the opposite way. Let's say that Paul Mulvaney goes to zero next month. He loses it all. I would still want to teach that class. I would still want to know how that track record of cumulative from May of 1999 is 2,157%. I would still want to discuss that issue, even if he went to zero next month. I want to know how that 20-year track record came to be, because there'd probably be an interesting story how it potentially went to zero next month. Now, what are the chances of it going to zero next month? Probably not high, unless the market system ends, unless the Fed rigs everything to destroy traders. Now, that's possible. Anything's possible with the government, right? Now, let me take you back to 2008, and I want to go to October 2008. I mentioned this in my 5th edition of my trend following book. And if we go to October 2008, Paul Mulvaney, the guy that I'm talking about, made 45.49% in October of 2008. Now, that's kind of interesting, isn't it? I mean, October 2008 was an important month, wasn't it? That was the month that most people said, well, if you made money in October of 2008, you were doing something wrong. 45% positive for October 2008 was something wrong. I mean, people have actually said that. If you've never even heard of Paul, or if you've never heard of trend following, or if you've never heard of looking at track records, I'm giving you a little bit of ammunition here. Look, I don't care what your direction is in finance, markets, money, whatever. If you don't know what I'm talking about with this track record, if you don't know why he made 45% in October of 2008, if you don't know why he's made 88% the first 4 months of 2022, stop what you're doing, because whatever you're doing is bullshit compared to not knowing what that is. What I just described, to not know what that track record is, to not know why it exists. If you don't know that and you're working on some other bullshit like 5-minute bar trading, give me a break. What are you doing? Jerking off? Back to my Paul Tudor Jones start of this episode. I mean, what's Paul Tudor Jones? Is he worth over 10 billion? A lot of that is trend following performance. And he's telling you, hey, this is where you want to be for the next 5 to 10 years. You don't have to trust his opinion. Go look at the track records. Now, of course, it's damn interesting that Paul Tudor Jones says that on CNBC. It's damn interesting that he's that honest. Now, did you notice, though, the CNBC types, they don't have any idea how to follow up at all. I've talked about it on this podcast. You can go find the excerpt on YouTube, probably. Joe Kernan interviewing David Harding for like the first time. And Kernan, in his infinite wisdom, sits there and makes fun of Harding for being a trend-following trader. Oh, you're just a quant guy. Oh, and all these ridiculously stupid jokes, right? Now, of course, Harding was managing severe money at the time, big dollars, a great early trend-following track record performance, and all CNBC could do was to make fun of him. Now, it's kind of interesting if you roll forward 10 years or whatnot, then Jones comes on and they give him some respect. But there's no follow-up, right? There's no follow-up. He says go trend following, and what do the CNBC stock jockeys say? Not a peep. Because if that conversation actually opens up on CNBC, what does it mean? Well, it means that everything that's occurring typically on CNBC is bullshit. 100% bullshit. Don't you love how the world works, right? You get this truth teller that rolls into the system, Paul Tudor Jones, and he speaks the truth. And the system just sits there and shits their pants, hoping. I hope his soundbite doesn't go on too much longer. I hope I don't have to ask him a follow-up question. Let me get back to the other questions of asking him where the economy is going to go, what the Fed is going to do next. Let me get back to more bullshit. But don't ask any questions about why Paul Tudor Jones would say, if you were to ask him, what's the strategy for the next 5 to 10 years, gun to his head, he's going to say trend following. And I got to tell you, as somebody who grew up in the South, so to speak, Virginia, my mother from Southern Virginia, I was around Southern accents a lot. I got to say, don't you just love Jones' accent? I love it. There's always something about a Southern accent, at least in my humble opinion, a Southern accent that has a little more truth-telling in it, a little more veracity in it. You just like it more. We got some crazy, crazy times unfolding right now in the markets. Look, maybe the Fed will engineer this all to turn it right back around and you're at all-time highs again. But if you got back to all-time highs again, let's say in the next 1 month, are you then back to just trusting these people? Trusting them to tuck you in? Go back and look at what happened in 2002. Go back and look at what happened in 2008. These were Fed-rigged markets. We're living it again. I have no earthly idea what's going to happen next. But the first 4 months of 2022 are already historic months. A historic start to the year. Historic trend following performance. And if you don't understand it, if you've not yet figured it out yet, well, it's time to get going. There's a ton of resources out there. There's a ton of voices out there. But now is the time to get started. Because look, you got to be able to imagine the downside. What is the downside? Can you imagine the NASDAQ going down 77% like it did in the fall of 2002? If you can't imagine that, you're not a serious person. And that's back to ending with Paul Tudor Jones saying trend following is the direction. And the great thing about that direction, it's only got one big positive, really. Over the long term, you're going to make good money with trend following. And you're going to have some control of not being at the mercy of the system. And that's what we all want. Or at least I would think we all want that. Because if you don't want that, I don't know, man, go find yourself a padded white room. You might enjoy that better. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.